everybody out there in YouTube land. This is Rudy MVP. The first two videos I made were about the MACD divergence. In this part 3 and final segment explaining the MACD, I want to show, there's about 6 markets here, and I want to show trades that did not work. Okay? Divergences are a great signal. They're my favorite signal, but they don't work 100% of the time. But when they don't work, usually your losses are fairly small. The market's gone your way enough, but sometimes you just take a hit, and I want to explain how I managed those losing trades, and also want to show that when divergences do fail and they end up breaking out in the opposite direction of the divergence, that is a very powerful signal, and you want to take that trade even though it's going opposite of what we thought it was going to do. Let's give an example here. Here's a futures contract of the US T-bonds. Now back here in July of this year, we had a bearish divergence on the MACD. If you don't know what divergence is, you got to watch part 1 and part 2, and that'll give you a fundamentals on what divergences are. At this point, we're going to show trades that worked, and just as importantly, ones that did not work. I think it's really important to discuss signals that did not work. So here we go. Our first MACD bearish divergence in T-bonds in the first week of July 2010. Okay, we got bearish divergence. Market goes to a high and a higher high, but the MACD divergence, the momentum is saying nope, bears are running, or the bulls are running out of steam. So we get a signal, the lines cross, and I go short right in here. Okay, and it went my way for a day, and the next 2 days it came up. Market stopped me out with a loss. Well, I'm thinking, okay, well, we had a losing trade. You know, it happens. That's part of trading. And so we're sitting on the sidelines seeing what T-bonds are going to do here. Well, about 3 weeks later, T-bonds make a high. They go to a higher high. And the MACD makes a high, but again, it goes to a lower high. So we have a triple MACD bearish divergence. Now, at this point, I'm thinking, okay, this one's going to work, okay? Usually when you have a MACD divergence, it doesn't work, and it goes to a new high, and it forms a triple divergence. Oh, okay, this is money in the bank, right? Well, that's the human emotion side of me thinking this is going to be a winning trade, but let's look what happened again. The lines cross, I get the green light to go short, so I'm short right in here, and we don't do anything for a couple days, then the market pops pretty big to the upside, and we get stopped out for another loss. Okay, so we've had 2 losing trades in a row here. Here's the important thing about divergences. When they fail, you're going to have losing trades, but when they break out to the upside, that is telling me that this market is strong enough, is still bullish to shrug off any bearish divergence that we're getting. So a lot of times when bearish divergences do fail, and we got a bearish divergence, we're expecting the market to come down. It fails and it breaks out to the upside, goes to new highs. You want to put your ego aside and become a bull, okay? And that's one very tough thing to do for traders. You know, we see this and we're bearish. Okay, this is classic. Market fails to respond. We have a loss. Does it again, we have another loss. You've had 2 losing trades in a row. Now, the toughest thing for traders, we tend to become gun shy. Two losing trades in a row in 30 days in just this one market. We're afraid the market breaks out to new highs. You want to swallow your pride, swallow your ego. This is just trading. Okay, it's not a life or death situation. It's just trading. As long as you use good money management, you're going to be fine. Okay, you're going to live to trade another day. Market breaks out a second time, and long at 130, and had a nice run here. Nothing too big, but a nice decent run. So you want to take advantage of those on failed breakouts, failed signals when the MACD does not work out and it goes to new highs. I personally just go with it, or you can just stay out. You just stay out and just trade the divergence, because there was no divergence to go long here. It was just a breakout to new highs. So okay, now let's look at T-bonds. Here's one that did work. Here's a classic. It's worked perfectly. Market goes to a high, goes to an even high, or almost, and divergent MACD does not even come close. And the lines cross, got the green light to go short in here, and not a bad trade at all. So let's look at another market, natural gas. Here's another one in natural gas. This thing, I was so bullish natural gas in June, it wasn't even funny, and people are like, you can't go bullish natural gas in June. I mean, the weather, it's not cold, and well, I got the signal to go, so I had to go. Here the market makes a low, makes a lower low. The MACD makes a low, but makes a huge higher low. This is really nice, and I see this pattern, I'm like, okay, this thing's bottom, it's ready to rock and roll. Well, it didn't. Get the green light to go short in here, or if you're really conservative, you can wait for it to bust through resistance here into new highs. So you could have gone long here or long here. And what the market do? It failed, knocked us out with a losing trade. So thinking, okay, great. And we didn't have any divergence in here. But what do we have? We have a market that broke out into new lows right over in here. You got your support. So here at a bullish MACD divergence, it failed, losing trade. Sit on the sidelines. Now remember what I said a lot of times, when these divergences fail and they go in the opposite direction that they should, a lot of times that can be a huge trading opportunity, and you're re-entering the overall trend of the market. So this market, the bullish MACD fails, market goes to new lows a couple months later over here. That is telling me this market is so bearish it's willing to shrug off any bullish divergence out there, and that's exactly what it did. Broke out a second time, green light to go short, and since then the market made lower highs, lower lows, all the way over into here. And right now I'm bullish. Right now I'm bullish natural gas because of this right here. We got a bullish divergence, green light to go long. And here's another one. Here's another bullish divergence. So we got the green light to go long here. Market just going sideways, got another green light to go long here. These haven't panned out yet. This is real time, but I just want to show you the power of when MACD divergences do not work. A lot of times when they break out in the opposite direction that we expect, they can be huge, huge trades. Okay, copper. Here's another one in copper. Copper made a bearish divergence right over here. Went our way for a day maybe, then the market went to new highs. We get stopped out. What do? Swallow your pride. I was wrong saying that copper had topped. It went to new highs. I go from bearish to bullish. I go long right in here. Nice uptrend. And now I'm negative copper because of a bearish divergence. Okay, I got a couple more charts to show. We're going to have a part 4 of the MACD. Didn't think we would, but these 10 minutes fly by. So I'll have a part 4 of MACD showing a couple more divergence trades.